Well, Lyft's second quarter earnings due out after the bell today, and its rival Uber is set to report tomorrow after the market close. So what are you expecting? We're going to bring in the experts, right? Let's bring in our panelists to take a look at the expectations out of both companies. Doug Flynn, co-founder of Flynn Zito Capital Management, and Igal Arunian, equity research analyst at Wedbush Securities. It's great to see you both.
Great to see you.
Before I get to Uber and Lyft, I mean, you're both fully immersed in the market. Doug, let's begin with you.
Sure.
You wake up this morning, bond yields dropping, markets dropping. Are you nervous, or is this a buying opportunity? You're going to wait it out?
I think the backdrop is still good. So, we expect 3 to 4, 5% drops in any given year, and we've only had, 2. So I would look for that as an opportunity to get in for things that you've been sort of waiting on the sidelines to get into that maybe had gotten away from you with the market run up. So I'm not overly concerned about a recession or anything in the near term happening that would be that negative. So I look for some opportunity here.
And Igal, I know you follow so many things. You have a lot. I know we're talking Uber and Lyft today, but you have GoDaddy, Groupon, Wix, Shopify, Yelp, Etsy, eBay. So this morning you get up, you see this selling. What do you think about your basket that you follow so closely?
Well, we've got a lot of exposure to small, medium-sized businesses, so I think that's a really good read into the overall economy and the consumer mindset. Overall, we're still seeing strength from a lot of those companies. We're not seeing too many earnings misses. Right. So I think some of the market noise, again, might be some good opportunities to get into the fundamentally sound companies.
All right, so noise. So neither one of you is particularly fazed by today's move. So Igal, let's start with you and your thoughts on the Uber versus Lyft. I know you like one more than the other. Right. So let's start with, I'm going to start with Lyft because that's today. Sure. Your thoughts?
Well, it's both of their second quarter as a public company, so I think there's still a lot of kind of investor hesitance in the space. Lyft needs to put up another strong quarter to get investors behind the story. There's really not a lot of enthusiasm behind Lyft or Uber or rideshare as a whole. We're continuing to see a lot of losses, and that's still a challenge.
There's no profitability.
We're going to need to see.
But you like Uber better than Lyft.
We think Uber has a better opportunity to reach profitability over Lyft because of their global scale.
Doug, what do you think?
I like them differently. I think that if you're like more of an international take on it, then sort of Uber would have that because Lyft is not international to speak of. I also think, Lyft on the other side, I like more of their recurring revenue and the fact that they have a ton of cash from their IPO. So in that respect, they may be a little better set up in the near term to absorb some of those losses. Right. So I like them, and I don't like them.
Would you put your money in either one of them?
To a point. I think below the IPO price. I mean, a lot of IPOs that do come out trade lower than their IPO price within 18 months. Nothing is like beyond meat across the board. So below its IPO price, I think I would consider it. But once it starts getting close to that, I would probably not.
And that's for both of them?
Both of them are similar to me in that respect.
Okay, because they're both below the IPO
exactly.
price.
So in and around there, I think you have an opportunity. But they do have a ton of losses. And quite honestly, that's going to continue for probably 3 more years before we see any kind of positive and
Igal, I know with the target on Uber, you have $65, right? Is that right?
Yeah.
Do you still believe in that number? I mean, we've been below $45. In fact, we broke below 40.
Yeah, so we believe in that number. It's the valuation based on some of the parts of that business. It takes into consideration Uber Eats and rideshare and being on a global basis.
Right.
Also their leadership position within rideshare in terms of autonomous driving.
How about they've been raising prices and lowering what they're paying the guys, right?
That's a mixed story. There's a lot behind that. That actually brings up a really good point. That something investors are really focused on right now is the legislation in California. That's a big overhang on both right now, and the gig economy as a whole. It looks increasingly like California is going to push.
Do you guys have? I mean, I don't have much time left. Do you have one stock that you love? Any stock? On a day where we're selling off of all the stocks, Doug?
Me, yes. I always come back to the healthcare space. It's the most beat down space.
And what's your favorite?
And so Biomed is one that has gotten some negative FDA kind of confusion.
What's the ticker on that?
ABMD, and it's something to take a look at.
Igal, what's your favorite these days?
My favorite has been and continues to be Wix. It's a website builder, play on SMB space, and
Right.
they continue to do.
WIX is the ticker on that one, right?
Yeah, WIX.
All right. Well, I guess you're going to be going home on either an Uber or Lyft today, but it's a great discussion, and we'll have to follow up and see what happens with these after the bell today and tomorrow. I'm really hopped up for these. All right. Thank you both. Great discussion. Thanks so much. Thanks to our panel, Doug Flynn, co-founder of Flynn Zito Capital Management, and Igal Arunian, equity research analyst at Wedbush Securities.